$3,000 to borrow $800,000. 0.375%.
People would be lining up at the bank that could get loans that cheap.
Do you know what the big thing is? This is savings.
So most guys that work in the railroad, they do their 20 years or however long it is, and then they just sail off on a pension and just, that's their life.
Mm-hmm.
Why were you different? Like, what happened?
Well, I still needed to do another 10 years in order for me to get to that level.
So it is 30 years to get the full pension.
30 and out and 60 years old.
Okay.
So I said to myself, there's no way that I can be here for another, let's see, I retired at 42. So that was still another 18 to be 60 because I started at 22.
Mm-hmm.
So therefore, I needed to go a little bit longer than 30 years. And I just couldn't.
So it's either 30 years or 60.
30 and 60. Yep. So,
okay.
Yep. So, I mean,
wow.
I started at 22. So that was another 8 years that I had to put in. So I would have to put even more in. And I just didn't see myself staying there that long, holding me back from being able to do what I really could do.
It just blows my mind. And sometimes I think I'm the broken one because, you know, I'm the lesser of the majority, you know, where people literally work 20, 30 years for a pension and Social Security.
Uh-huh.
And that's what we look forward to in life. I just don't know the purpose. Like, you worked with a lot of these guys. Help me understand that. I mean, I've just been self-employed too long, and I'm broken. So I'm trying to understand, what do the masses think? Like, you know, you get this job, like the railroad, for example, and you put in your 30 years to age 60, and then you retire and you get a decent pension. So maybe we can talk about how much the pension is and the benefits, but like, I don't know. I just feel like something's missing in that.
Along the way, it was giving up the time. I was a yard master at the end, and I would work my 8 hours, and 6 hours in, the phone would ring. And you know what that phone call said? You're staying for another 8. And I had no control. I had to stay. If we had to go to a party, I couldn't go. If it was Ariana's Christmas or whatever, didn't matter. I was stuck. I was not in control.
What if you said no? What would happen?
There would be nobody there. I don't think I could say no. There was no relief. I was stuck. They have you. As soon as you walk foot in that door, you're there for 12 or 16. 16 is the yard master.
Wow. But let's just say you did ride it out and you did your 30 and 60. Mm-hmm. What would your pension have looked like?
Upwards of about 5,000, 6,000 for me, and then my wife would get half of that.
Right, because it's the pension.
Yeah.
Yeah.
So we're not in the Social Security system.
Right.
We're grandfathered in. So longshoremen and railroaders are the only two professions in the United States that do not pay into the Social Security system. So yeah, we contribute our money into our own pension. And that alleviates a little less during the week also. So you're living on a little bit less because you're putting
money into the pension. But no Social Security. And I remember this when I was an advisor. I dealt with a lot of people, you know, that worked in the railroad. And for the most part, all of them seemed to do quite well. Like, they had a good lifestyle. Mm-hmm. They seemed to make good money. And, you know, if they retire, so what would that work out to be? So $8,000, $7,500, $8,000 a month?
I would say something around that.
And, you know, the average person, I suppose, can live on that. But, you know, I don't know. There's nothing wrong with that. And I guess a lot of people just continue to do that. What changed for you? Was it the time thing?
The main part was the time thing, and Ariana was 3 years old at that time too. So she was going to daycare. I was working. I wasn't spending enough time with the family. I was on third shift, Tuesday, Wednesday off. You know what that's like? Never to have a weekend, never to see Christmas or New Year's or being able to plan anything.
Sounds like it sounds awful.
Is all time. That's all time. And I needed my time back. But because I was already doing my real estate, I was using my railroad money to fund my real estate hobby. And that started in 2000. So I hired out in 98. I started doing my real estate in 2000, 2 years after I hired on. 2009, 2010, we were up to 8 doors. I started getting into HELOCs, utilizing the simple interest instead of the amortization, putting me into
We'll get into that in a second because I want to know how you did the math and figured that out. Because the average person, they just don't even think about that. You know, they're just like, they look at a regular mortgage and they say, hey, I got a mortgage at 3 or 4%.
Yep.
Like, I'm crushing it. You know, and like it's hard to argue that because like, all right, the stated interest rate is 3 or 4%, but when you actually turn the page one page and you start to see that this isn't really what it seemed.
That's right.
You know, yes, it's 3 to 4%, but that means you got to pay the mortgage for 30 years.
Right.
On a 30-year AM. So you figured out the simple interest. But I want to pause that for a second. Let's go back to the real estate. Like, what made you're in the railroad, you're making good money, but then you started in real estate.
Yeah.
Who got you into that?
My mom.
Okay.
Yep.
Interesting.
My mom. My mom was into buying Myrtle Beach, oceanfront real estate. And she was doing that for a few years. And she said, that's the way that the wealthy make money. So I needed to start getting my own real estate.
So you started buying properties, fixing them up, and then renting them out. Was that the model?
My first one was a townhouse that I decided to fix up, and I was going to actually move into it.
Okay.
Well, I never moved into it.
You have a tendency of doing things like this.
Yes, I do. I actually met Katina, and we got married, and that's when I bought the duplex. So then I was going to live in the townhouse, but then ended up moving into the duplex instead.
So you just rented the townhouse.
Rented the townhouse out.
And at that point, when you had, how many doors did you have?
That one,
6, you said?
When I met Katina, we were up to 1, 2, 3, 4, 5, 6, 7 doors.
7 doors. Were you making more in real estate than you were on your day job?
Not yet.
Okay.
I don't think not yet. It was a supplemental.
Sure.
It was supplementing because we had a mortgage on them. So therefore, when the rent came in, it was self-sufficient. But putting the equity, getting money and building the equity in the houses.
Okay, so what happened next? So you're doing this real estate.
So you said you had the mortgage in one hand, which I did. The duplex was a 15-year biweekly. I believe it was right around 3%. And then we bought a house that we moved into in 2009. And that was a 30-year, like 3.25. And I got mad. Just like you said, I flipped the page and saw exactly how much was going to interest. That duplex was yielding me $2,600 a month, $1,200 on the left and $1,400 on the right. And that bill was $2,200 a month.
That was the 15-year biweekly.
15-year biweekly. And I'm like, this is crazy.
But most people would be like, well, yeah, Joe, just go to the 30-year and then you'll have more cash flow.
No, I wanted to pay that off and utilize that money so I could buy more. So I'm trying to get rid of it and pay it off as soon as I can so I can utilize that money to grow. The longer that time span is, that's going to hurt me. That's why I went to a 15-year instead of a 30-year to begin with.
Because you wanted to pay it off quicker.
Exactly. And then I went back into the bank and I said, listen, I need a HELOC for $175 to pay off this duplex. Well, by me doing that went down to like $386 a month for interest only.
So you got a HELOC on your primary house or on one of the other?
I got a HELOC on my primary house in order to take out the duplex.
So you used the HELOC on your primary. You paid off the duplex.
Yep.
The duplex was bringing in what'd you say? 2,600.
Yep.
You used to give away 2,200 of that on that 15-year.
And I dropped
But now
it down.
with the HELOC, you were at $300 and some dollars a month?
400, yeah, 386,
Nice little rate.
something like that. So 400.
But most people would say, but you're not paying off any principal.
But now I have the ability to run that $2,200
Yes.
directly to principal every month when I was only putting a portion of that over.
So actually, like 1900 extra
Yep.
after the interest to the HELOC.
Yep.
1900 could go to principal.
Yep.
I already know the math, but why don't you explain how that worked out?
So now that almost $2,000 was going directly to the principal, but I wasn't done with that. I was adding my paycheck. I was adding the wife's paycheck, and we were putting all of that into the HELOC. That was going to be my savings account, my checking account, and my investing account.
I mean, you put the money in, you pay down principal,
Yep.
you have access to that money.
And as that money went into that HELOC, that was less interest that I had to pay per month. So I created a one-pot system. All my money went into that HELOC. I would pay the HELOC out of it. I would pay my mortgage out of it, my gas bill, my electric.
Did you have a checkbook attached to the HELOC?
Absolutely. So I would just keep everything right down on the checkbook and see exactly where all that money was going.
What year was this you started doing that?
That was 2010. 2000 at the end of 2009, 2010.
So there was like nowhere in the industry where people were talking about first lien HELOCs back then, is there?
No, I don't even think there was a name for doing what I was doing at that point in time. I was just trying to utilize my money and be efficient with paying down what I needed to do in order to get to the next level. I calculated it out. It was all mathematical, and it made sense, and I was able to do it. I was able to get that HELOC. I was able to attain what I needed to get in order to make it happen. And then a year and a half later, I have 175 in that HELOC. I went back to the bank. I said, how much can I get on the house? I'll give you a $400,000 line. Beautiful. That paid off the big house.
Yeah.
And I did the same thing. Now that 2,600, that rent was going where? Into the new HELOC.
Yeah.
Along with my paycheck and her paycheck. I knocked that 400 out in another year and a half.
And a lot of people, like when they hear you saying both your paychecks are going into the HELOC, they're like, well, how'd you pay for groceries and diapers and all sorts of things?
So you have to be regimented. And in order to compensate for this, everything would go on the credit card. Everything that I did, the grocery store, if we went to get gas, everything went on the credit card because I only had to pay that once a month.
Okay. So most people live that way.
But my account wasn't going up and down, right? I wasn't using a debit card. So as that money stayed in that HELOC, that was minimizing the interest that I had to pay out for borrowing the money. Because a HELOC is based on the average daily balance over 30 days. So the least times that was going up and down, the more money was staying in my pocket.
Interesting. I mean, I love it and I use it now, but like it took me a long time to understand it when you're used to explain it. And I'm sure a lot of the people listening to this are having a hard time understanding it. But you got a bunch of videos, and I know we're going to create another one kind of talking about that. Yeah. And the other thing, too, is it's not so foreign anymore. There's actually companies like CMG Financial or CMG Mortgage that they made a proprietary product that attaches the bank account, the checking account, with the HELOC, so they're really just one.
Yep.
Hence your one-pot system, but actually a true one-pot. Like you deposit money in the checking account, every night they sweep that. I think it's every night. They sweep that checking account balance and pay down your HELOC with it.
That's
next day when you need money in your bank account, they just float it back up. So it's really just one component.
Yep, it's sistered to the HELOC. It is called a sweep account. So now when your paycheck is direct deposited to that checking account at midnight, every penny goes into the HELOC because now you're being efficient. You're utilizing every dollar at midnight. And then a couple days later or a week later, you want to pay the electric bill or gas bill. You go into your bill pay, $150. It shows negative $150 on the checking account. And at midnight, it automatically moves from the HELOC to the checking account.
No more NSF,
the credit card.
none of that stuff. Yeah.
Nope.
Wow. Such an awesome system. Wonder why they don't teach more of this.
Well,
Do you think banks make less doing this?
absolutely.
Oh, okay.
Because you're losing out on the amortization. You're not in control. But just
I was talking to a guy the other day. He's got a program called Slow Flip. It's a brilliant program. He's on PMC. And what he does, he goes on and he only does houses that are $30,000. Okay. He borrows money at 12% interest over 5 years in first lien position. So like me and you, we would lend them 30 grand at 12%, but it's an amortized loan. So we get paid back in 5 years. We get all of our principal and interest back at the rate of 12%. Okay. What this guy does, he takes that $30,000 house, gets it a little fixed up, resells that $30,000 for say 50 on a 30-year mortgage.
Oh,
He's the mortgagee.
Oh,
right?
yeah.
So then he's financing the deal because he doesn't owe anything on that house, right?
Right.
Because he already paid it off over 5 years. But because he sells it on the 30-year at like 10, 11%. Now, I know that's really high, but these are people that can't get a mortgage, right? So he's financing people that normally wouldn't be able to get a mortgage. And then that 30-year AM gives him all that interest, but he gets paid for 30 years. But the amount of that 30-year payment is more than what he was paying in that 5-year because he sold it for more. It's a brilliant program. He's been doing it for, God, he's been in investing since 90s. And I don't know, he's been doing this over 10 years.
that is the true definition of becoming in
the bank. That's what I said to him. He told me that. I'm like, wow, so you were really the bank. The only thing that could be better is if you ran all this through a policy first and did that entire program and lent the 30-year mortgages from the policy.
Yeah.
Yeah, we'll get there with them.
Oh my gosh.
Yeah, crazy, right?
That'll be supersizing, just double.
But he called the 30-year mortgage, like, we were talking about. He's like, yeah, it's the biggest scam going. But he says people don't look at it as a scam. They're like, this is home ownership. This is how we buy our home. We get a 30-year mortgage. They don't realize they're getting scammed because they really are. How much interest they're giving up in those first 10 years in that 30-year mortgage is obscene.
Totally.
Well, you know the math. Just like, what does it work out to be? Like in a 30-year mortgage, like it's not 3 or 4% interest like they think. How much are they actually paying?
So a 3% mortgage, 30 years, is equivalent to 12% simple interest. So if you go to bankrate.com and you put in that you wanted a $100,000 house at 30 years at 3%, that would calculate out to about $100,000 in interest. So then that would be equivalent to $100,000 at 12% simple interest.
Wow, I never knew that.
Yeah.
12 and 3.
Yeah, you'd be doubling. And then people who say, oh, yeah, my mortgage is like, it's a 5% mortgage. Well, you're almost at 15% simple interest. So by switching...
What did they say when you tell them that?
Well, how do you figure that out?
Yeah.
Well, I give them the equation. Well, 3 is 12, and you're at 5, so that's at least about another 2.5 on top of the 12. You're looking at about 14.5, 15%. So if you switch down to a HELOC at 8%, yeah, you're saving almost.
I know. Well, we both have the same. we both have the same bank, credit union, I should say, that does our first lien HELOCs, and we started at 3.99. Yeah, shut up. I got 95. I don't know how that all worked out, but yeah, it was 3.99 intro for 12 months. You reset at the new rate, right?
Absolutely.
What is the new rate?
Right now it's at 8.
And I tell people that. I remember I was out with a friend. I'm like, oh yeah, I don't know how we got on the topic of mortgages. I'm like, yeah, I got a first lien HELOC. It's like over 8%. And he's like, oh my gosh, that's crazy. I'm like,
good, right?
I'm like, yeah, it's crazy good. Like, I'm paying my house off way faster. Well, how at 8%? I'm like, simple versus simple versus amortized interest.
Yeah.
And he didn't. I just stopped there. You are different to me because you have that kind of tenacity where you just continue to explain and explain. Me, I'm just like, it's not that I don't want to waste my time. It's just like, I feel like they're never going to get it because they're not willing to receive. They're not willing to learn. Like they think they're right because 3 is less than 8.
I love numbers. I love being mathematically correct. And I have been doing this for so long that it just makes sense. Mm-hmm. I mean, if what, 15 years? 15 years of using a HELOC, using simple interest, using arbitrage and leverage. It's totally different than what I was doing prior to this with paycheck to paycheck and using the mortgage and seeing the money go away. And then I met you, and our first deal, that came directly out of the HELOC. And I gave that right to you.
That was so funny. I mean, we met at the home show, where we had the big booth there, and I think you said something like, "Oh, we should do a deal together." And I you know how many times I hear that? I'm like, yeah, sure, all right. And then you showed up at the office, tell the story.
So I came to the office, and you were in a meeting.
Yeah.
And I heard people talking, so I kind of knocked on the door, and your back was to me, so you look behind, and you look at me like sideways, and I'm like, Chris, I met you at the home show, and you kind of like, and I says, you still got that deal? And you're like, yeah. And the lady, she got up and walked out, and I said, I only got a little bit here because I have to go pick up my daughter. And we sat down, and 16 minutes later, you throw this piece of paper in front of me, the perfect loan proposal, ask me for $250,000. Wow.
Thompson, yeah, I remember that house. That was a good one.
Thomas Jefferson.
Yeah.
So I had to leave. I'm like, oh, I have to go pick up my daughter. You're like, yeah, sure you do. I said, no, I'll be back later. You're like, yeah, sure you do.
I didn't mean you didn't have to go pick up your daughter. I just meant yeah, sure, right, you'll be back. Heard this one before.
So I bolted. I had to go. I had to pick her up at school. 2.5 hours later, I came back to the office with a blank check in my pocket. When I showed it to you, and I go, who do I write this to? What'd you say?
Remember, I was in awe.
He said, who the hell are you? I said, I'm Joe, you're Chris. Now let's make some money.
Yeah, that was a good flip, man. That was...
Your real estate business lives and dies by the network and the connections that you make. I mean, after all, your network, well, it's your net worth. That's what you always heard, right? If that's an area where you desire improvement, well, Private Money Club, it's for you. PMC saves you precious time and money by bringing the real estate world, well, right to you, right in the palm of your hand. So get in on the action like so many others have by going to privatemoneyclub.com and sign up.
I can't say that out of the 274 or 5 flips we did, that's one that I remember as a really, the start to finish, the whole thing was a positive, except for we needed to put drain tile in the basement, and that was a little unforeseen, like a couple grand. But outside of that, that house sold quick.
Yeah.
Probably could have got way more. Can you imagine what that house is worth today?
A lot more.
Oh, yeah. Yeah, and that's the whole thing with real estate, right? It's like 274 times I took this much profit where now it would have been this much. You can kick yourself in the ass thinking about it, but at the time, that's just the model that we played. That's just what we were doing, and just get in and get out of them. But yeah, it's not the way you really build wealth.
I was doing that for a couple times. Did it a couple times. Bought a couple houses, intended to move in, and ended up flipping them for money anyway.
Yeah, it's all the ones that we held that made the most. Like recently, Dima remodeled a rental. I bought it in 2014 out in Lockport for 27 grand. And I rented it. I mean, we renovated it then. Maybe we put 25 grand into it. It was just a light rental. And then I put a roof and siding on it after that. So let's just say I was 35, 40 grand into the renovations on it. I rented it from 2014 till 2025. And then that guy that was renting it ended up, I don't know, man, he just went off the deep end and stopped paying. So we evicted him. He trashed the place. So Dima went in, renovated the whole thing, like 45-ish grand. And then we sold it for $132. But that single house, and I was the bank on it. I held the mortgage on it. That single house paid off that mortgage, which was me. I got my money back. Plus I got all the interest over those years, but it also paid off another mortgage that I had on another property. I mean, like, that's just buying and holding, right?
Can't beat that.
It was a pain in the ass every once in a while with that tenant, but dude, one house pays off 2 mortgages. Now I got another house that's bought and paid for free, rented out, has been rented since 2013.
I'm not a good landlord.
Yeah. Well, I'm not either. I'm not either. But anyway, so that's how you found the first lien HELOCs boat. And then we started flipping houses. How many did we do? How many did Thomas Jefferson? That was the first one.
Aurora.
We did Aurora. That one sucked. Did we make money on that one or barely?
Yeah, a little bit.
A little bit.
Wasn't much. Not much.
Yeah, the house, a pain in the ass. The building inspector there sucked.
Yeah, you
Yeah.
had a couple times that we had to stop doing what we needed to do.
Yeah, happens.
Time is money, though.
Time is money. Yeah.
Was there one after that? There was another one after
I
that.
thought there was, and I don't remember which one.
I can't think of what it was.
Probably didn't make any money on that one. That's probably why we don't remember. You know, you made money on some, you lost on others. Others, you just barely made anything.
But I mean, that's when I had my aha moment. So I was doing with you in the beginning, just flipping, and then
and then me and Larissa had the TV show going at that time. Like we were working toward the TV show.
Yeah.
And
yeah.
then we were doing those events we had the event center out at the mall, and we would do those events once a month. Dude, remember there would be like 60, 80, 100 people every month.
Doing the bus tour.
That was crazy. Yeah, we were doing the bus tours. Those were so fun. Doing the bus tours. But I remember I'd bring, I had just learned about the infinite banking concept, about being your own bank. And me and Larissa were doing it. And I was so enamored by it because it was just awesome that I'm like, Brent, come out, speak to the audience. And he would give me some marketing dollars to like advertise and get more people there. And for me, I'm like, hey, the more people that are here, the more we can promote Flip Out and the TV show and the thing. So it was like a self-fulfilling prophecy for me. Brent was paying for the marketing because he wanted butts in the seats and I wanted butts. So it worked really well. And
That was a win-win.
you remember that? We would sit in the back, me, you, and Larissa. We'd be in that back corner. And Brent would be doing his presentation, which I pretty much had memorized because I'd seen it so many times. And people would ask questions, and I was answering questions from the back of the room. I probably shouldn't have done that. I probably should have just let Brent do it. I was just so excited about it.
It was a good time.
And you were too, but you weren't.
I was, but I wasn't. I still had the mindset of scarcity because I was still flipping. And I just couldn't understand, why am I borrowing the money from myself? And that was a hard lesson to learn. If I was doing a flip and I had 3 toilets and I had $100 allocated for each toilet, and each toilet cost me $125, where was I going to steal the other $75 from?
Yeah.
In my budget. I can't take it away from the flooring. I can't take it away from the painting or anything. Yeah, I wish it wouldn't have taken me 16 months to understand.
I remember you used to always, like, at first I was super excited, showing you all this stuff, and then all of a sudden, like, I was just like, he's never going to do this. And you kept asking me about it.
I wanted
I was just like, yeah, I kept answering your questions, but I was just kind of like, after 16 months, you pretty much lose faith in somebody. You really do.
I had that aha moment, though. Katina wanted that Cadillac. So I went over to Sheridan, went over to Kaiser, picked her up that XT5, and then he was walking me out of the building to my Avalanche, and he goes, ooh. I'm like, Rob, don't even think about it. Come on, Joe, humor me. Go sit in the Escalade. I humored him. Took the Escalade for a spin and bought that one too. And then we got on the 290, passing the Blue Tower. I called up my mom. I says, Ma, you're never going to believe what I did today. And she's like, yeah, you bought Katina that Cadillac. I says, I did, but I bought 2 of them. You bought 2? What did you get? I said, an Escalade. She goes, oh, you always wanted that. I said, I did. She says, good for you. She says, I was watching that commercial. I says, yeah. She goes, I like that little one. I said, the little one? The XT4? She goes, yeah. I go, you want that? She goes, okay. So not only did I buy a XT5, I got an Escalade and an XT4 that day. Why buy one when you can get 3, right?
Right.
So a week later, it was Friday, had to go to Lakeshore Bank, get a cashier's check for $148,676.37. After all the trade-ins and the deals, that's what the number came for all 3. So she's driving the Hummer out. I drove the Avalanche out, and we're sitting there in front of Rocco. And he's like, well, the paperwork's ready. The cars are ready. Do you have the check? I said, oh, do I have the check? I puffed up my chest. I'm dealing with cash. I wiggle it out and take it and crisp it up, and I hand it over to him. Well, he grabs the check from me and pulls. I pulled. He pulled. I wouldn't let it go. I'm thinking, and this is the aha moment, if I were to take that money, run it through the policy, borrow the money out, pay for the cars, I'd still be making money.
At 100,
at $146,676.37.
yeah, you'd be earning uninterrupted compound interest on all of that. But you're not.
And I won't do it. I won't do it. Do you know how much money since May of 2019 to today I would have had?
No.
And I don't know either, and I'm never going to find out.
Oh my God! I thought you'd done the math. I'm like, why would you do that to yourself? Well, I'm glad you didn't figure out how much you lost, but it did change everything for you from that point on. So let's just pick up from that and talk about like what's changed from that tug of war with that check where you realized this money's gone forever.
Well, I called you up and finally understood the IBC and said I was ready to go. I didn't have to dip my toe into it. So I kind of maximized everything that I could and
Yeah, you started with a healthy policy.
threw it into the policy. My first one was the big one.
Yeah, it was. But that was what, 5 years ago?
Yeah, right around 5 years ago.
So that
2019
was screaming right now.
it's doing very well.
And what were your dividends when you started? Were they like 5.9?
Somewhere around there.
Yeah, like 5.9 or 6%. Now, what did Mash just declare as the dividend crediting rate? 6.6? 6?
I don't remember.
But it's gone up.
It's in the 60s, I'm
been
sure.
great.
See, and that is why I utilize it as a run through. So all my money comes into the HELOC,
Just like it used to.
right? And it still does. I do annual policy. So now when it's time for the annual, I'll take it out of the HELOC, put it into the policy, and 2 weeks, 3 weeks later, as when it comes to cash value, hit max loan. Take it right out of the policy, put it back into the HELOC. The reason for this is this year I finally calculated it out. So I owe $800,000 to my policy.
Okay.
I had to pay $38,000 and change for interest.
Was it that much?
Received $35,000 and change in dividends. $3,000 to borrow $800,000. What's that interest rate, Chris?
Like high. So you borrowed $800,000 from your policy,
And
to which it's cost 30. What was the interest rate?
5.5 or something.
Yeah, but the total amount of interest it was due.
So I had to pay $38,000
Okay.
and change. But I
Your
received
dividend?
$35,000, a net operating cost of $3,000 to use borrow $800,000. Ready? Are you ready?
Yeah.
0.375%.
People would be lining up at the bank that could get loans that cheap.
But that 800 is lent.
Well, that's the part. That's the exciting part.
Making me more money.
Yeah. Because you took that 800. A lot of people heard that, but they didn't know what you used it for.
Correct.
You took that money and you loaned that money out.
Yeah.
Probably right around 12%, maybe more.
Nothing less than 12.
Yeah, nothing less than 12% interest. So the 12% on 800,000, how much is that per year?
And it came into my HELOC, pushing down
Yeah,
that
APR.
interest. And that is why my one pot system works.
Yeah, because you could say the 12 that you earned on that, the minimum of 12 that you earned on that 800 offsets the 8, we'll just call it 8 for the HELOC. People would be like, oh, okay, you're making a spread there, but then no. But because you're doing the one pot system, you're paying that down. So you're really not realizing an APR of 8%. And this is the part where people that are listening are going to have a hard time because it's just math, but it's so simple when you actually just plug it in.
So when people don't minus the dividends, they're saying, yeah, but you're borrowing from the policy, you're borrowing from the HELOC, and they're coming up to 14 and 15%, which is not true. I just told you, inside the policy, I'm at 0.375, less than 0.5%.
Next year, it'll be the other way.
It'll be even less.
Making money.
Yeah, I'll be making money.
Yeah, because that's year 6, and I don't know where you're at now with the dividends having gone up, but yeah, I mean, year 6, you're going to be, so literally like, yes, it cost you a little, 0.3, what was that? Yeah, so like
375%.
37 basis points is what you would call that. So basically barely cost you anything, but next year you'll make money.
As long
Your
as
interest your dividend will be more than your interest.
Yep.
And the next year will be even more on your dividend and more and more. And every year for the rest of your life,
Yep.
it'll be more.
Exactly. So as long as I'm lending it, making more in arbitrage inside the HELOC, it's a no-brainer. And with the velocity coming in and that money coming in on a monthly basis, that's pushing down the principal there.
I got a personal question. So because we use the same credit union for our first lien HELOC, do you run all your income through a credit union checking account so that it's all one bank?
Yeah.
Oh,
So
okay.
so it's at the credit union.
Well, the credit union actually pays you interest on your checking account too.
Well, I move it into the HELOC
Immediately, okay.
immediately.
So you're just on their website. Their website's actually not bad. It's pretty
Right on my
easy to do
phone.
that.
I do it right on my phone.
I never used my.
Oh yeah, right on my phone.
Anyway, well,
I'll show you how.
yeah, CMG's got that. In CMG, you don't have to do any pushing.
No,
You just
CMG
put it all
is-
into the bank account. It automatically sweeps into the HELOC. I mean, I know we do what we do, but like for people listening, they should just get
Well, I'm not going to go to CMG because they gave me 100% of my house.
I get it.
I have
They
to
didn't
do
give-
what I gotta
they didn't
do.
Give me 100%.
And I've been running this game since 2009. You know, I mean, I would be running from this bank, and the other bank was about a mile and a half down the road.
Mm-hmm.
So the paycheck would come into the one bank from my railroad. I'd wait for 3 days so it would be there. So on Monday, I would say, okay, give me $5,000, and then I'd run that over to the other bank, put it in cash, okay, put that in my HELOC, and then do that like every Monday. And then when it was time to pay, I'd take that money out and throw it back over to here and pay the bills. So, hey, you have to do what you have to do. I want to be efficient with my money. I want to make sure that I'm utilizing the dollar. If I leave it here and this goes here and I don't move it from here to here, I'm not being efficient.
Mm-hmm.
And that is what I strive for.
What's the biggest challenge when you're explaining to people what you've been doing for over a decade, you know, which to you is second nature, like you don't know anything else.
No.
But when you explain this to people, what are the reactions?
Wow.
So how come they're not all doing what you do?
After I talk to them, they do.
Okay.
I will show them what they're doing. So on one of my phone calls, let's say you're my first phone call. It's a question and answer period. I want to see where their mindset is. So I break it down and I ask them what they're doing. Do you have a mortgage? Do you have a HELOC? Oh yeah, but it's not that much. Do you have a savings account? Yes. Okay. You have a HELOC? Yes. How much do you owe in that HELOC? They would say, oh, not much, just $25,000. Had to put new windows in or something. I said, great, that's awesome. You have a savings account though too, right? Yes. Okay, how much is in that savings account? $30,000. Awesome. What is the interest that you're paying every month on that HELOC? They'll say 8%. Great. So you're paying 8% on $25,000. Yes. That savings account that you have $30,000 in, what are you making in interest on that? Oh, 0.001? And I said, so you're not being efficient. What do you mean? I said, why don't you take that $30,000 in that savings account that's making you nothing, move it over to the HELOC, not pay that 8%, and you still
That's the same as
have
making 8% on $30,000. So how you then should say it is, hey, if I knew of a bank that gave you 8% on your savings account, would you want to know about that bank? Oh my God, yeah.
Absolutely.
Pay it to your
You just did it.
You just did it.
Look at that. In 30 seconds, I just saved you $260 a month.
And the thing is like people hear this and they're like, they have that aha moment. I'm just like, why wouldn't people just know this? This almost should be like something you're taught in kindergarten. Like, because that is so simple. Like,
Dollars and
8 is more than 1. And if you could make 8 instead of making 1, that would be better for you, right?
Right.
I asked my 5.5-year-old the same question. She'd be like, yes, Daddy, 8 is more than 1.
Do you know what the big thing is? This is savings. This is what I owe. Their mindset can't combine the two.
I know, but they are the same.
They are the same. Do you pay your electric bill with red money? Do you pay your gas bill with blue money? And your credit card with yellow money?
I didn't know any money had different colors. Actually,
Isn't it all
Canada.
green?
We're not in Canada anymore, so.
That's the loonies.
The loonies and the toonies.
Isn't it all green money?
Yeah.
So why isn't it all in one place?
So then riddle me this. So same scenario. I've got 30 grand sitting in a savings account.
Yep.
But I'm earning 3%, Joe.
Ooh, 3%. Okay.
Yeah.
And?
But I've got this Amex credit card over here that charges me 24.99%. And I owe them $30,000. Life is good.
Yeah.
I'm getting 3%
That's awesome.
on my savings.
And you're going to use this credit card every month, aren't you?
Yeah, but we try to pay it down. We don't want the balance going any higher.
Well, if you're still going to use that card,